We all want profit in our business, right? What if I told you there were 3 different types of profit and one of them was much better than the other 2? Hey, badass business owners, my name is Tammy and I'm here to help you grow your business, but more importantly, grow those profits. And we do that by understanding our business numbers. And today, what I want to do is I want to take a few minutes and I want to talk about profit because we all want profit. Profit's very good, right? At the end of the day, a lot of that profit, hopefully if we do it right, goes into our pockets, and that's the ultimate goal for why you have a small business in the first place. Now, what we need to do is we need to understand profit. So before we jump in, let me go over a couple of basics that you need to have in your mind. First off, you've heard me say the number one calculation I want you to always remember is sales minus cost of goods minus expenses equals profit. And I'm going to explain that a little bit more here in a second. But it's easy to understand that for every dollar comes in, the first thing you're going to do is you're going to pay your cost of goods. These are the materials, products, ingredients, the labor, anything associated with making or producing your product or service. Then you're going to have your operational expenses, hence why I call it expenses, which are all the other expenses you have in your business in order for you to pay your bills, right? You're going to have your rent, you're going to have your insurance, advertising costs, anything operationally to run the business. So cost of goods is anything to make or produce the product, and then expenses is everything else that's left over to help you run the business. A lot of times we call them expenses. You'll hear them also called operational expenses, and that'll be important when we talk about profit here in a few minutes. And then at the end, we end up with profit. Now, the thing to keep in mind, profit does not mean that's what goes in your pocket, because at the end of the day, once you get to that profit has 3 jobs to do. First thing it's going to do, it's going to have to pay your taxes. You're going to owe taxes. But the good thing is, usually you're paying taxes on this profit. There are some other calculations that are tied to that. That's where you have a CPA or a tax specialist. But, for the most part, let's say you end up with $3,000 of profit at the end of the month. That's probably what you're going to be taxed on. Everybody's tax situation is different. I'm not a tax professional, so you definitely need to seek one. But in our theory, that's what we want to look at. So part of that $3,000 that we just made in profit, some of that has to go to pay the taxes. The other thing that some of that money needs to do is what we call retained earnings. It is money that you're going to leave in the business so you can grow the business, pay future bills, buy products, things that you need. Then finally, you're going to have what's left over, and typically that's part of the owner's draw. That's what the owner typically is taking out of the business after they've paid all the bills and all the people that they need to pay. So once again, sales minus cost of goods minus expenses equals your profit, and then your profit has to go to those 3 things: taxes, retained earnings, and then finally owner's draw. Now, if we go back to what I started this whole entire thing, and I was telling you that there are 3 types of profit. And the reason that you're going to hear these other names on profit is because they are used as part of your business numbers. So it's important you understand what they are. And typically where you're going to see those are going to be on one of these fun things, if I can pop it up there, and that is a profit and loss statement. And on this profit and loss statement, it's going to show lines that talk about profit at various stages. And as we've talked about before, your profit and loss statement actually follows the same sales minus cost of goods minus expenses equals profit. But other types of profit pop up. So let's talk about those. The first profit you need to understand is when you hear people talk about your gross profit. You may have had someone ask you, so what's your gross profit? And you look at them, you're like, I don't know. What is my gross profit? Gross profit is really simple. All it is your sales minus your cost of goods. So let's just say that you buy this pen for $1, but in order for you to get this pen, you have to spend 30 cents to go buy a bunch of these pens. So your gross profit on one pen would be the difference between the sale. So sale is $1, right? And you paid 30 cents for it. So your gross profit is sales minus cost of goods. So it would be the $1 minus the 30 cents tells you your gross profit is 70 cents. That's all gross profit is. It's your sales minus your cost of goods. Now, we all know, because we preach this all the time, that in order for you to have great pricing, you also got to make sure that you understand you've got expenses to pay and bills that you've got to pay. So gross profit is something that a lot of people use because they're like, I know I can pay my bills and I can have profit if I have 70% gross margin or gross profit. That's usually what they're talking about. Margin is just the percentage version of it. Profit is the dollar version. So they know that if they can make 70 cents on every single one of these things, they're going to make some money. So sometimes you'll see people that really just push the gross profit and making sure that they've got a 50% gross profit, a 70% gross profit, a 30% gross profit. It really just depends on how high your cost of goods are. Typically, that's what's going to control that. So your gross profit is going to be the 70 cents. And if we take the 70 cents divided by the dollar, your gross profit is 70%. And that's your first type of profit. The next type of profit that you're going to hear about is operational profit. And when you're looking at your profit and loss statement, a lot of times you're going to see that after you take off your operational expenses. So all it is taking the sales minus the cost of goods minus the operational expenses is going to be your operational profit. And if you notice in our calculation, we always go sales minus cost of goods minus expenses equals profit. When I'm talking to you, I'm talking about operational profit. That's usually what I'm talking about. I just don't say the word operational any more than I say operational expenses. I just kind of take that out to make it easier for you guys. But the type of profit that you and I are always talking about is before you pay those three things, right? Before you pay your taxes, before you pay your retained earnings, and before you pay yourself. That's that profit line that I'm talking about. And that's an operational profit. So all that is once you take your gross profit, which is sales minus cost of goods, then it says you have another profit line called the operational profit, which is after your expenses. And then that's going to be your operational expenses. So when I use my calculation, I'm talking about operational expenses. It just means after you pay your operational expenses, what kind of profit are you looking at? Now, the final profit a lot of times that you'll see is what's called net profit. And what the net profit is for a lot of you small folks, all it is saying is your net profit is after you pay your taxes. So let's just say your profit is $3,000, like I had talked about in an earlier example. And now you set aside $1,000 to pay your taxes. So your net profit, your operational profit was the $3,000, and your operational profit was the $3,000. Your net profit is after those taxes. So now your net profit is actually $2,000. And from that $2,000 is where you go pay your retained earnings, as well as the money that you're putting aside for yourself to take out as an owner's draw. So if we go back to the pen, okay, let's just say we pay $1. Our expenses are 30 cents. So that gets us to our gross profit of 70 cents. Then let's just say we take another 40 cents out for operational expenses. So our operational profit will be the 70 cents minus the 40 cents, which leaves us with 30 cents, which now means that we have 30 cents for operational profit. And then we're paying another 10 cents out for expenses. So our final profit, or net profit, if you will, is going to be that 20 cents. I know it gets really complicated, and I'll try to put this all in some examples onto the side here as I go. That's probably going to help you out. But the main thing is just to understand them. All right. So the main thing is just that sales minus cost of goods minus expenses equals profit. Okay. That's going to get you to your operational profit. And that's going to be a great starting point. And just knowing that profit has three jobs: taxes, retained earnings, and paying yourself. I always talk about the easiest way for you to remember that, because I think it's much easier than you trying to memorize these other three types of profits and what's going on. But with that said, you need to know your business numbers, and you need to know what they mean and what they're trying to tell you, because they do have importance in your life. And I also want you being able to have conversations with other people that when they're like, well, what's your net profit or what's your operational profit? You're going to be able to understand what they're talking about. But listen, depending upon where you're at in your business, just remember sales minus cost of goods minus expenses equals your profit. And then your profit has those three jobs: taxes, retained earnings, and paying you, the business owner, for being a business owner. Okay. That's the main thing. I just want you to understand those. And for those of you that are really ready to understand those business numbers, don't forget, I do have that affordable course that will walk you through the P&L and a bunch of other terms and understanding your reports and stuff to understand your business numbers. So make sure you check that out. There is a link in the show notes. But my main point right now for today is for you to know not only our normal calculation, Sales minus cost of goods minus expenses equals profits. And profit has three jobs: retained earnings, taxes, and then owner's draw. I'm going to say it over and over because we want this to really sink in. So forgive me if you keep hearing me say it, but there's a purpose for me doing that. And just remember, there's three types of profit. There's gross profit, which is sales minus cost of goods. Then you have operational profit, which is after you take off those expenses. Operational profit is usually what we're talking about when we talk about profit. And then finally, your net profit, which is going to be after your taxes. Now, there are some other things that could also be taken out during that time frame. You might have some other things like depreciation and a few other things that sometimes will be put down there. Your tax person will work with you on those particular things, your CPA, whoever you have. But for our conversation, from the vast majority of you, it's probably going to be mainly your taxes, which is the biggest thing you take out. Sometimes when you look at big companies, I'll have a bunch of other things under there. We're not going to get hung up on that. We just want you to understand the basics of what you need to know for your particular small business. So hopefully you have found today's video to be very helpful. If you have, give it a like, a thumbs up, hit that subscribe button. We're going to continue to talk about your business numbers to help you have a better understanding of it. And yes, I will do more videos on this subject because repetition is what gets you there, okay? Just remember, sales minus cost of goods minus expenses equals your profit. That's going to get you 90% of the way. Just know that when you're having conversations with people and they're talking about profits and they're bragging, going, oh, my profit is this. Ask them what kind of profit they're talking about. Is it their gross profit, their operational profit, or their net profit? Because they might be giving you a number that isn't telling you the entire story. Okay. With that, I am going to get out of here. Hopefully this has helped you out, and I will talk to you next time. Bye for now.